Eric, we're seeing a whole lot of volatility in the market now, but even last year and the year before when indexes were flying, we still saw a lot of interest in alternative assets. Why was that?
So, Greg, we're seeing this transition from what historically has been the 60-40 investment portfolio to more of a 50-30-20, the 20 being private markets. And if you think of money like water, money is going to find its level. And so it's constantly looking for that right balance of risk reward. And we've had an imbalance between investment demand, those looking for capital, and those supplying it. And really what's happening, we see the large asset managers sort of in this transition period, moving from institutional money alone to now attracting the high net worth and eventually the mass affluent investor. And so that transition has been happening for a little while now. The last 3 days in the public markets just highlights the importance of portfolio diversification for all of us.
Well, back in 2022, we saw stocks fall and bonds fall, and that was the initial big rush into alternatives. Can you talk about the appeal of having an asset that's not mark to market, something that doesn't move with the markets? You don't have to check the price on your phone all the time.
You shouldn't check the price on your phone all the time, regardless. And that's part of the issue, right? Psychologically, watching your portfolio drop like a stone is it's hard on the heart, right? And so when you have a portfolio that includes, we like to say private markets now, not alternatives. Alternatives has this like negative connotations, traditional and alternative. Really, we want to talk about private markets. And so when you have a diversified portfolio, you're going to reduce the volatility in that portfolio. And so psychologically, what we know is that most of us are not good public market traders, right? Everybody knows you're supposed to sell high and buy low. And what do? The opposite. And the thing about private markets is once you're in until you're not. You can't wake up and hurt yourself by pushing these little buttons on your phone and saying sell.
So Alto RIA offers a whole lot of different alternatives. Can you talk about which ones are performing best? You have crypto, you can invest in sports franchise to a certain extent. Which ones are people looking for now? Which ones are performing the best?
So it's not really a question of best. So I'm going to redirect a little bit. And what I would say is we now have 30,000 people on the platform who have invested, give or take, $2 billion in assets. And that's across private equity, venture capital, real estate, artwork, crypto, private credit. So it is in itself at Alto an opportunity and a tool to diversify your portfolio. We're not going to know what's quote unquote best for another 5 to 10 years because that's the way illiquid assets work.
What are some of the psychological barriers that keeps people from investing in alternatives? Is it the fact that there's liquidity issues, or they're not going to see a 6-month track record or a 1-year track record like they would in a mutual fund?
So it's not so much a psychological barrier as an educational barrier. And we need to do a better job of bringing education to the marketplace and making them aware of the upside and downside of investing in private markets. The same way the same way there's an upside and downside investing in the public markets, but no one historically has really talked about the private markets that way. They just say, it's risky, it's unknown, we don't know what the return's going to be, we don't know when you'll get liquid. So lots of questions, but what we see happening in the market today is forms of liquidity that can happen either quarterly or semi-annually. And that's just an evolution in the private markets that will continue to happen.
And then finally, can you talk a little bit about how technology is changing the way people are investing for retirement?
So with Alto specifically, we allow you to invest in private markets. Historically, that was really hard to do. The first time I ever made a self-directed IRA investment, it took me 10 weeks. Today, because we are the IRA payment rails for many different investment platforms, you can do in 1 minute what took me 10 weeks. And that's technology, right? So you check a couple buttons, you sign your name electronically, and then all the magic happens behind the curtain, right? Via APIs. And that just didn't exist 10 years ago. It's actually why we built Alto.
All right, well, thanks for coming on and talking about it.
Thanks, Greg.